How's it going, YouTube? Welcome to another video with the House Money Investing channel. In today's video, I'm just going to be going over some stock picks that I got, some stuff I added to my watch list. Not going to go too depth into detail on these picks. You're more than welcome to look at the tickers and do your own due diligence and stuff like that. If you want to look at the balance sheets, the fundamentals of the companies, and that sort of things. I will go over them briefly. Just basically give you what I do know about the companies and stuff like that. So we'll get it started with EXPE, which is Expedia. This was down a little bit last week. It's right around, it's at $124 per share, so it's still got about $10 left on the upside. So this is something that I'm going to be swing trading this month or next month. Within the next 30 days, I'll try to swing trade it and see if I can't earn some free fractional shares. So basically what I do is deploy money into the market. I'll pull out my capital and I'll leave all my gains into the market, hence the house money investing. And that's what I consider free stock, and it's risk-free beyond the point. After I get to my capital, whatever the gains are, I can leave that in the market and let it compound over decades. And this is something I do every 30 to 90 days. I just started this challenge back in June, and I have accumulated over $12,000 worth of house money by using this strategy. But back to Expedia. This is a company I like, with the vaccines and stimulus and everything like that coming out. I feel like a lot of people will be traveling, so you should see some nice gains from this company. They do pay a nice dividend. It's not a huge dividend, but it is 0.54, and they do have a market cap of $17 billion. Most analysts got this one as a hold or a buy. So Expedia, they have like a dominant network effect, that only a few different companies like this can enjoy and stuff like that. They removed like $550 million in fixed costs back in September, and they plan to make that a grand total of like 700 to 750 million in the future. So basically they plan on removing another $200 million in variable costs. So we should see some savings reinvested back into this platform, and they should benefit from that from the next several years, from outsized online traveling booking growth in China and stuff like that. So definitely give this one a look. If you don't know, they're basically like an online travel company, and they have different products and services to the leisure and corporation, like corporate travelers and stuff like that. So definitely people are going to be traveling, and they also own like hotels.com as well as of course Expedia.com. So it's kind of like the flights plus the booking of the the space that you're going to be staying in. This company was founded back in 1994, so I just see this one having some kind of growth, over the next coming months. My second pick I got that I just added to my watch list is VMC. This one is right around $145 per share, and it did pretty good last week. This one also has a dividend of 0.94, PE ratio a little over 31, with a $19 billion market cap as well. And it's got about a $8 upside, to reach that 52 high. So still some growth here. Most analysts got this as a buy, some as a hold. So definitely, write this ticker down and take a look into it. And it's like they have a footprint in states that need like increased road work, and they have the capability to fund it. So definitely take a look into this one. Their earnings have been pretty good. They've been hit or miss, since the fourth quarter of 2019. But they should do good, and once stuff gets back going, a lot of businesses are going to be booming. They kind of engage in the provision of like basic materials and supplies for infrastructure and construction. So this will kind of get you some exposure to that industry of like construction and stuff like that, like building, concrete, calcium, stuff like that. They do asphalt. They do asphalt mix, ready mix concrete, primarily in like mid-Atlantic, like Georgia, Southwestern, Tennessee, and stuff like that. They do like Arizona, California as well, New Mexico, Tennessee, and Texas. And it sells ready mix concrete. So they also have dealings in like Virginia and Washington D.C. as well as the Bahamas. They produce calcium products for like animal feeds, plastic, water treatment industries, and carbonated material minded products as well. This company's been around over 100 years, so definitely with the concrete and the calcium, I see them making money as well as the economy gets back rolling. Then you got SPG. This one I just added to my watch list, but it's nothing new to me. Simon Property Group is something I own already. I'm up 31% in this position as it is. I just want to swing trade it because it was beat down last week, so I see this thing making a bounce back, with stuff starting to open up. So it's definitely something I want to build my position in. They have a nice dividend. It's almost 8%, and they have a good PE ratio of 18% with a $28 billion market cap. This thing is beat down to $86. The 52-week high is $149. So definitely a lot of room to grow. And then they're doing like curbside pickup right now at some of these malls and stuff. So once they start opening up, of course the revenue is going to go up. Most analysts have this as a hold or a buy as well. I think they'll continue to present like attractive locations for tenants to place stores, as well as retail companies, to look to reduce store counts and present the most desirable locations for e-trailers, to try to establish a physical presence. Simon Mall and the Outlet Mall contains a high percentage of the best malls, over throughout the country. And basically when they get paid rent for these people, these tenants renting out the space, we get paid a dividend. So definitely a nice benefit there. The EPS has been going down. It's been on a downtrend, of course. A lot of people are locked inside in quarantine and stuff like that. But basically it's like a self-administrated, self-managed real estate investment trust. It develops and manages retail real estate properties, which primarily consist of like regional malls, outlets, and stuff like that. And this has been a company since like '93. I'm sure everybody's familiar with Simon Property Group, Simon Malls. We all use them. We've all been there. I'm actually a person that likes to physically shop. I'm not a big online shopper, so I'll definitely be one of the consumers in these malls spending money. Next up, we got ASAN. This one was around $30 a share. It actually did pretty good last week. Their 52-week high is barely above the price now, but I do still see growth in this company. It's got like $1 billion valuation on it. The market cap is $4.81 billion. Some like Bloomberg, they downgraded it, but hey, that's just because the EPS, which they actually made good EPS, in the third quarter of 2020. And basically what they do is develop like work management platforms that helps team or orchestrate like work from daily tasks to cross-functional strategic incentives. So definitely look into this one, and do your own due diligence. It's out of California. It's been around since 2008. And with people getting back to work and coming off unemployment, their business model of kind of helping people get back to work and stuff like that, work management platform, I mean, to me it's a sure thing to hit. So it's definitely going to be something I swing trade as well. Then we have good old Bentley Systems. This one here last week did pretty good as well. It still has a little room to grow to its 52-week high, about $3. It's got a high P ratio of 94, and it's evaluated at $10 billion. And quarter 3 of 2020, they also had nice EPS. And what they do is like software solutions for infrastructure, like engineering, enabling the work of civil, structural, geological, technical, plant engineering, project delivery, enterprises, owner operations, and stuff like that. So definitely take a look into them as well, as they deal with more of the commercial aspect. And they've also been in business since '84. So that's just a quick view of that one. Then we got AIC3.ai. This one's been doing, pretty well. Last week it was up like almost 15%, over a $12 billion market cap. Near the 52-week high, which is 145, but it still has like a little bit to go. And this one like has dealings with artificial intelligence and software for digital transformation. So of course, AI is the new wave, so definitely, they'll be developing, coming out with stuff. So it's something I'm gonna swing trade to see if I can't get something out of it. It's always tough trying to analyze stocks. I analyze stocks 7 days a week, whether I go super in depth or not. I'm analyzing, looking for new positions. I do currently have probably like, let me see. Let me be able to tell you exactly what I have on my watch list at the moment. I have so many positions. I have about 10 different brokerages or so, and I have so many positions that I'm constantly looking for stuff that I haven't invested in. So right now I have 413 positions on my watch list. So these are just stuff I added today. Just steady trying to find new stuff to invest in, because all the stuff I invest in so far has worked for me, and I'm just trying to add more, trying to diversify. JFrog really hasn't had much movement. Does have a lot of upside, probably about $27 worth of upside over the course of time. $2 billion market cap company. EPS wasn't so great, but these guys deal with like software products, and they do like software updates. They also deal with like x-rays and registries and stuff like that. And they have some dealings with the kind of compared to like Microsoft and Google Cloud and stuff like that. Also out of California. So definitely going to play these guys and see what happens. Then we got LSF Superfoods. It's around $45. Had a nice week last week. Small market cap, $400 million. Still has about a $15 upside in my opinion. They basically engage in like picking, roasting, and packaging of coffee. So it offers like creamers, mushroom blends, coffee beans. They got coconut waters, sugar, keto products. It's a fairly new company since 2015 out of Oregon. So, you got like Starbucks, you had Luckin Coffee back in the day, you got Big Face Coffee, you got all kinds of different coffee brands. So, People love coffee, so I'm going to try to swing trade it, see if I can't gain a position in it, and we'll go from there. Then we got OZOM. This one here last week was up, a few percent or so. $8 billion market cap. Still about a $6 upside on this one as well. This is an e-commerce company. They do e-commerce, but it's more of in like the travel sector, and they also sell like consumer products on a mobile application and on a website. So once again, another travel stock for the like consumer services and retail. I mean, you got to get into it because people are going to be ready to spend money. So like I said, I'm just steady looking for more plays. Then you got Sumo Logic. Nice 15% gain last week. $3 billion market cap. Still has a couple dollars on the upside. EPS killed it in the third quarter. They basically do like cloud-based machine data analytics. So, I mean, cloud-based is it's the new wave. So, why not? Why not try them out and see what happens? You gotta take some risks sometimes. I already have a bunch of good cloud-based companies, but I'm always looking for more. Then you got TLS, was up 30% last week. It's only $1 billion market cap. It's at an all-time high right now. And they're also in the technology factor as well. They design and have a provision of advanced technologies to deliver solutions that empower and protect the world's most demanding enterprises. This is like cybersecurity, cyber risk management, and compliance, which I believe is going to be kind of like one of the new waves, along with like MJ stocks and psychedelics, EVs and stuff. You've seen like the currency market and stuff like that just got hacked. So people are definitely going to be looking for cyberware and cyber protection, to keep these scammers and these bad guys out of keep them out of here. Then we got a BlackRock bond trust. Nice dividend of almost 5%. $1 billion market cap. This doesn't move much up or down. This is actually a stock I bought yesterday. And, it's always good to put some money into bonds, trusts, treasuries, and stuff like that. It's just another way of saving money on the side. It's going to beat out, 5% is a lot better than less than 1% in the bank. So I'd rather keep my money there in a trust and just, kind of let it stack up. Then we got DNB, up 6% last week, $11 billion market cap. A little bit of upside I see in this one, a couple bucks. A lot of analysts got it as a buy. Nice EPS for the second and third quarter. And this is basically an investment holding company with interest in providing business decisions, data, and analytic solutions for industry verticals, including financial services, technology, communication, governments, retail, transportation, and manufacturing. I mean, who doesn't like analytics? This here is just from a Robinhood account. These are some gains I had today. Up $938, which is 26.31%. As you can see, I have a little bit over $4,500. The markets are closed. This is gaining from my cryptocurrency that I have in my Robinhood account. This here is Bitcoin Cash. As you can see, I don't even own but like 8% of a coin, so it's valued at $30, but I'm up 57%. Made $10 off of it. This is something I just put money into, every 3 months or so. I put like $18 or so on Bitcoin Cash. Just building my position on it slowly for surely. Then we got Dogecoin, one of my favorite coins. I have over 24,000 coins. I'm up 54%. Made 38 bucks. It's valued at 108. I put about $9 into this one every 3 months. Dogecoin, it's not gonna take much for it to go up. You had Dogecoin NASCAR, you got the charity stuff, you got Elon Musk tweeting about Dogecoin. I know it's a meme coin and all that stuff, but it's one I like. I mean, it's been around since like 2013, and it's steady growing. So if I would have put $30,000 into Dogecoin back when I bought this, when I first started buying it like 6 months ago, that'd be valued around like 50 grand. So, that's the type of gains I'm looking for. Then you got Ethereum Classic. I own almost 10 coins, average of a little over $5, is valued about $66 or so. I'm up 16%. Total returns over $9. I put about $18 into this one every 3 months as well. Then I got Bitcoin SV. Average cost is $192. Got about 30% of a coin. I got $61 worth. It's only up 0.34%. And this one looks like I put about $22 every 3 months in this one. So it's a slow gainer, but hey, I'll risk a little bit of money to see what happens. Why not? Alright, and then we have another stock pick here. Ticker symbol A. As you can see, the share price is at $119.30 for the week. It barely even moved. This one pays a small dividend of 0.60, which is better than nothing. $36 billion market cap. It's around the all-time highs, but analysts are saying to hold or buy. And this one is in electronic, and it is dealing with like electronics and stuff like that. I'm trying to think exactly what they're dealing with. I know their EPS was good, if I remember correctly. I know it's based in like the science market, so I guess they do like diagnostics and then the chemical market and stuff like that. So yeah, from what I can remember, I'm sorry I did these earlier today, but it does like I think it does like clinical and life science researches and stuff like that. This is a exposure to the healthcare sector, as well as I guess some technology. Basically, like healthcare services and healthcare supplies, which with the vaccine and stuff like that coming out, I'm just looking for more healthcare exposure, as I already have a lot, but why not add some more? Everybody knows about Hilton. The hotels didn't do very good last week. Small dividend of 0.5%, $29 billion market cap. Has about a $12 more run up. A lot of analysts say to hell with this one as well. I was looking at their loyalty program. They have like 103 million members, which about 64%, I think like 60 something percent of the rooms are booked by these 103 million members. So these people are very loyal. Of course they want to build their points up and stuff, which the EPS has been down. Last quarter it was up. I think with the EV and people start with the vaccine and people starting to travel, I see them making some money. So I'm gonna swing trade this as well. And they're in the hotel sector, and when you got 103 million people that are kind of loyal to your brand, then of course you're gonna make money, because some of those people are gonna travel. Alright, then we got HHC, Howard Hughes, up 3% last week. Has a lot of upside. The 52-week high is at 129. It's at $81. $4 billion market cap. EPS has been spotty. They had a nice third quarter though. And this is like a real estate company. So they deal with like commercial, residential real estate. They also have like hospitality, like offices and multifamily properties, along with like other real estate investments. They have like a large scale long community development projects around Vegas, Houston, in Maryland. And they have like one restaurant. It's like 450,000 square feet of restaurant, retail, and entertainment properties. That's like basically like over 400,000 square feet worth of retail stuff. This is headquarters in Dallas, Texas, actually where I'm from. The DFW area. So just a little exposure to the real estate market, and also something based out of where I'm from. So I see that making some money as well. Then we got DIA. This is a ETF for the Dow Jones. It basically follows with the Dow Jones, but I believe it's leveraged. This one pays a little dividend of 1.9, which is pretty good. My safe range is 2 to 4. $25 billion market cap. Of course, Dow Jones around all-time high, so is this. But it's basically a weighted index of like 30 large cap U.S. stocks. So with me being bullish on the market, that's something I'm going to get into. And, as it goes up, I make money. We have same thing with the UDOW. It also tracks the Dow as well. Small dividend of 0.36, $700 million market cap. This still has a lot of space to run up. It's basically a triple leverage Dow Jones Industrial Average. It includes like 30 of the largest U.S. companies in the Dow. So again, with a bullish sentiment, with everything that's going on, all the news, I see that one run up as well. Then we got the Technology Bull ETF. Of course, technology is so crazy. This thing was like up 8% last week. Very small dividend yield, 0.08, $2 billion market cap. This one still has a lot of space to run up, about $26 a share or so. Like I said, it's an ETF. It's triple leverage. It's a weighted index of like the largest U.S. Technology large cap companies. So with the way the technology is going and the big boom, we're steady getting new technology every day. That's definitely something that I think I can make some money on pretty easily. Then we got Mass. This is a new IPO, 908 Devices. I believe this has a lot more room to run. That's a fairly new company. They're into like chemicals and biochemical analysts. It develops products using like technology, analytical techniques for measuring the mass of charged molecules that's used for like chemical analysts, laboratories for applications such as safety, security, food science, biotechnology, clinical diagnostics, and controlling like industrial processes. So this one, like I said, it's a new IPO, and I'm gonna get into it and see what it does. Then we got PPL. This one I purchased yesterday. I purchased it in my M1 Finance. Spent about 90-something odd dollars on it, so I got about 3 or 4 shares. It was down last week. This one I do own in my Robinhood account as well, which I'm down 4%. So I'm helping to recover in my M1 with the shares I've just purchased. Nice dividend of 6%, $20 billion market cap. This one I see it running up another $10 per share. A lot of analysts got it as a hold. Management's decision to sell and its UK assets should allow investors to focus more like on the US utilities. So I think that was a positive move. Of course, EPS has been down as well. And this is basically like a utility holding company, which engages in like generational transmission, distribution of like electricity. So this will give you some exposure to the energy sector. And like I said, it's been down a little bit, and I see it running up. So I'm going to swing trade it twice this month. Then we have a JP Morgan Carbon US ETF, JCTR. And this one last week, this one don't really move very much. And it's around this all-time highs, 20 $22 billion market cap. But it's an ETF, so it's not going to move much. But it's basically like dealing with large cap USA stocks that have like a low carbon footprint. So it's kind of like the opposite of like a sin stock, I guess you could say. We'll give it a try and see what happens. Why not? I like these JP Morgan ETFs, if you can't tell. They always seem to do well for me. JEPI over 8 dividend, $158 million market cap. And this one is similar to like the S&P 500 with lower volatility, and also provides monthly income. So, if it's lower volatility or more income than the S&P 500, I'll take that all day. This is a stock I bought yesterday as well. Spent about 90-something odd dollars on it. I do own this in my Robinhood brokerage as well. I'm already up 1.4% on this. 2% dividend yield, $4 billion market cap. And this is also a weighted index of large and mid cap stocks developed in European countries. So this just kind of gives you exposure to a different region, like some outside of American stocks. You can get into the Chinese market, the European market, so on and so forth. Like China, you got like NIO, Alibaba, different stuff like that. So just more exposure into the European. So I'm gonna go ahead and swing trade this one twice as well, which I'll probably buy a share of this one, and I bought about 3 or 4 shares of this one yesterday. I'll probably buy these shares tonight. Probably my Fidelity account. No, I'm sorry. I'll probably be buying it in my Moomoo account. Then you got here we got a high dividend equity fund. It was beat down last week. It has a dividend of over 4%, which is good. $5 billion market cap. This one also has a little growth to it. I see it going up about another $10. And then it basically tracks like 75 of the highest yielding U.S. companies. So this should be a nice payday here with some growth potential. Then I love Vanguard funds as well. So this is a bond fund from Vanguard with 3% yield. And like I explained earlier, bonds is more of a safe play. Nice little play to save your money at with a 3% return. It's not something that's volatile, so it's not going to move up and down very much. And then we have another Vanguard index. This is basically the total world, fund, and it's got over a 2% yield. And there's like so many stocks. So this covers like everything all in one. So not very volatile, not super volatile. It's not going to move up and down very much. Maybe like, I'll say like $8 here and there. Over the course of a year, it might move up and down $8. But you're going to gain that nice little 2%, almost 3% dividend from holding that. So that's a nice, good way to save some money and, earn a little nice return as you do it. Kind of a low risk, safe play. Then here we have another bond fund. This is Flex Shares, 2% dividend yield. I haven't played with this one yet. This is my first time getting into this bond, but I do want to add it in and see what I can get out of it. Then we have PLTR. This one I already own shares of. I bought some more yesterday or day before yesterday. I'm actually in my Robinhood. I'm actually down on this position about 7%, 7.52%. My average cost is like $28. This thing is at like $26. But I see this thing coming back. It does like data, software solutions for commercial and government segments. EPS was super low on the third quarter. Not very good news out about this company. It's pretty bearish, but like I said, it's something that I think is going to bounce back. So I'm not too worried about it. That's why I'm going to keep swing trading it. Then we have apps, Digital Turbine. This thing had an amazing week last week, up 28%. Super high P/E ratio of 193, $5 billion market cap. This one has, I've seen 7 different analysts rate this 100% buy. EPS is killing it. And this company engages in the innovation of media and mobile communications, which help to deliver an end-to-end platform solution for mobile operators like application developers, device original equipment manufacturers like OEM, and the third parties. It operates through an advertisement segment, which is comprised of operator and OEM and O&O businesses. This one's based out of Austin, Texas, which is close to home. So this is kind of give you an exposure to the telecom market. Then we got SPY-C. Actually, I had a lot of picks today. This one here isn't very volatile either. Almost a 2% dividend payout. And again, this is the ETF, and it provides basically exposure to like the S&P 500 with like sympath. I can't even say the word. I can't even think of what it. Symptomatic options or something like that. I'll have to look back into that one. I know it has something to do with the S&P 500, so I said, hey, it's a SPY. I love SPY. Alright, so we'll go to the next one. CELH. Celsius. Did pretty good last week. $2 billion market cap. Good EPS. They basically are like into developing, marketing, and selling distribution of chlorine burning beverages. It offers flavors like grapefruit, cucumber, lime, orange, pomegranate, pineapple, coconut, watermelon, berry, strawberry, and cream. And this was founded in 2004. So this basically gives you exposure to the food and drink sector of the market. I also own like Fizz, F-I-Z-Z. You can take a look at that one. Nice little beverage company, of course, like Pepsi, Coca-Cola. So, just to name a few. Then we have good old Dell. This one I see as a good value play, which might be surprising to you. Dell has a nice PE ratio of 22.99, $2 million market cap, small market cap. I was looking at like the analyst rating, which most have it as a buy, because they have like a healthy cash flow, and they're paying down their debt and creating more long-term capital structure that can support their future investments. And their EPS has also been looking good. This is like exposure to software, hardware. Everybody knows about Dell, right? Dell computers and laptops, stuff like that. So I see Dell. It's looking good, looking promising. Then we got good old NetEase, NTES. NetEase is something I already own. I'm up about 3% on NetEase as it is. It was up 8% last week, so that's where I got most of my gains. A lot of analysts say to buy this one at an 80% rate, almost a 2% dividend yield on this company. EPS has looked good, and this is give you exposure to the Chinese market, consumer services, retail, software. This is basically an internet technology company which provides like premium online services centered around content, community, communication, and commerce. They have like popular games over there in China and stuff like that. online game. They partnered with Blizzard Entertainment, I believe. So they also offer like intelligent learning services as well over there in China. So they got a lot of stuff going on, and I see this thing growing. So I'm gonna definitely swing trade it. Like I said, I already own some, or I'm already up on it, so I like it. This one I have in my Roth IRA, in my, I believe in my Cash App. I'm up pretty good on this one, so I want to swing trade it some more. It was up big last week, 24%. It's 50-50 buy hold. Nice EPS. They're into more of the apparel and accessories out of California. They're like next generation fashion and stuff like that for millennial consumers. So definitely, you know, they do like footwear, accessories, beauty products, and they have their own established brands. The Forest segment provides like luxury products as well. And like I said, this is out of California. So, you know, the millennials are into clothes and fashion and all that stuff. And, you know, they've been doing pretty good. Like I said, it's in my IRA, so obviously it's something that I believe in. Then we got Canadian Solar, CSIQ. This one here last week did it well as well, up over 17%. The buy hold is 50-50. Nice EPS earnings. They're more into the transportation and construction services, so it's like an industrial segment of the market out in Canada. So definitely take a look into this one as well. They're also dealing with like energy, of course. I mean, you got solar power products, kites, operation of maintenance and services, and they sell like solar projects and solar power, stuff like that. So I mean, solar power is also, you know, something a lot of people like to get into and taking off. So give some exposure out there in Canada. So we'll see what happens with it. Then we got MSP. Did pretty good last week, up 4%. EPS wasn't that good, but this is also software, hardware, company out of Connecticut. It's also in the cloud-based technology solutions, and they more focused to like small and medium-sized businesses. So, you know, that's a nice little niche space to be in. And with the stimulus being passed, I mean, a lot of these businesses are just going to get a break. Then I posted some more gains for my Dogecoin. Now, at this point, it's up 67%. Then Bitcoin Cash is up 62%. As you see, the run-up Dogecoin had right there on that chart. Then we got good old Lulu. This is a company I also own in my Robinhood portfolio, and I'm up like 0.76% on this one. Had a nice week last week, over 10%. The CEO, he said he expects digital growth momentum to continue post-pandemic. Rated as a buy. And Lulu has over 300 stores in the U.S., and most of them are like 3,000 square feet. You know, basically suggesting room for growth. It has the highest sales per square foot of any U.S. apparel retailer. And they're on track to make more than like, I think, $150 million in revenue. EPS has been good. This is also exposure to apparel and accessories. Nice little company out of Canada, Vancouver, I believe. They're more into like athletic apparel and accessories. You know, they specialize in athletic wear for women, like youth women, and they also do e-commerce as well. So just another apparel company there, which I see doing very nice. Then we got another Solar Edge SEDG. As you can see, their share price right now is around $3.14. This is a company I also own on Robinhood. It's up like 6%. It's like a lot of information to keep track of. EPS has been good. It's a buy or hold. It's out of Israel. IPO back in 2015. They're more into like electronic devices, like smart energy technology, software tools. They do electric vehicle charging, and that's about what I got on Solar Edge. And I think that would be it for the night. Yep, that'll be it for the night. I got about another 3 hours or so. I'll make 6 trades, and I'll post that video later on. If you like this video, hit the like button. Feel free to subscribe, hit the bell if you want to follow my journey. If you like some of my stock picks, you know, I gave you about 45 minutes worth of stock picks, so definitely a wide variety of picks. You know, some tickers you can go through, some different sectors. You know, diversification is the key to me. So definitely check them out. See if you guys like them. See if it's something you want to get into. You know, think about the bonds, saving a little bit of cash. You can kind of stick your emergency funds in bonds. You know, a little exposure to like healthcare, apparel, real estate. You know, just a little bit of everything. And I'll see you guys in the next one.